TheoTrade. This is Don Kaufman. It's February 10th, 2023. There's just about 27 minutes left inside of this trading week. The S&Ps at present time are massively unchanged. Nevertheless, there has been some sell-side activity throughout the course of this trading week. Bringing us to the question, is the bear market rally over? Well, we're going to discuss that and much more here on this weekend's update. Let's jump right into it. As I said a moment ago, some sell-side activity here, but I'm just going to be very forthright in saying it's not over just yet. Look, there's a couple of signs that markets are clearly turning around. There's definitely some two-sided trade. We're even going to discuss here in a moment how there's pretty ample hedging activity going on, which can also point to a little bit more of a bearish tilt to markets. Nevertheless, I am going to tell you right now, I am not ready to call it. There's no time of death yet for the current rally. In fact, with the current rally, earlier this week, before any of the sell side activity actually occurred, earlier this week, I was kind of asking the question, what's different about this rally from this rally from this rally? And the answer to that question is this was actually a much more meager rally. I mean, the rally only was persistent to the tune of about 9% before effectively pulling back. Other rallies here, depending upon where you're measuring them from, were anywhere from 15 to 17%, another 15% rally here. So yeah, I have absolutely been calling this, it's the quintessential bear market rally at this point, which if you think about the idea of a bear market rally, it's kind of a double negative over there. But are we ready to throw the towel in and start to see some sell side activity? So let's just jump right into it here on the weekend update. As I said, there's now just about 25 minutes left inside of the trading day. There's not a huge amount of activity. The volume has kind of dropped off. I know it's Super Bowl weekend. You would think we were coming into a holiday though right now. I think they should make the Monday after Super Bowl weekend a holiday. Nevertheless, the S&Ps at this point, they're just listlessly drifting. So as we were saying, getting down to it here, back to the bear, right? Are we just going to drop right back into a bearish market? Now, before I go any further into this, it's imperative to understand that you are going to have a CPI report, which we're going to discuss here in just a few moments. There's going to be CPI coming out next week. Clearly, it's going to be a pivotal, just absolutely pivotal number, okay? Do not take my word for that. We're going to look at the implied volatility, which distinctly says, get ready to rumble with implied vol definitely jacked up for next week. Anyway, before I get to that, when I ask the question, we come back to the bear. So some sell-side activity hits the markets. And when it comes down to it, I like to look at what is termed expected move. And it's something I just incessantly discuss. And if you take a look at expected move, nothing wild and woolly has really happened, if you will, this week. If you look back at some of the previous weeks, the first week of trade, not that much happened, ground listlessly higher. Second week of trade, we hit the upper edge of the expected move. The third week of trade, we broke to the downside. End of the week mildly lower. You had a breach, of expected move, another breach of expected move and a pullback. Look, all you're seeing right here, right now, this week, we did in fact tag the lower edge of the expected move. We've basically bounced just mildly off of that. And it's critical to know that, again, even I'm talking about, getting back to the bear and the bear market rally could be over here. There's no question that some two-sided trade, and when I mention two-sided trade, I mean, look, all that signifies is the marketplace at this point, okay, it's not just going straight up. And there's going to be a little fear driven into the heart of anybody that has bullish positions that's looking for this year to be a massive recovery from obviously what was a pretty dismal 2022. And the second that we pulled back over here, you could feel it. You could literally feel it. People were starting to freak out already, from what I, again, amount to, yesterday's trade and some Thursday. It's a rather mild pullback. But that mild pullback was also, felt in volatility. All right, let's actually kind of really break this down. When I say, with that terminology here is, back to the bear, one thing that was a real standout throughout the course of this week is the VVIX. It lit up, okay? Effectively, the VVIX all of a sudden came to life. Now, the VVIX is the volatility index. Now, I am not a trader, okay, that looks at VIX on a day-to-day basis. I believe that VIX itself, it's become kind of, passe, if you will. I always say it's my predecessor's volatility indicator, but VVIX, the volatility index, what is it? So the VVIX is looking at 30-day vol in VIX itself. So the VIX itself is nothing more than an equation based on SPX volatility. Who cares what SPX volatility is 30 days, out? But VVIX is insightful because VVIX actually tells us the activity, okay, of the actual options within VIX itself. And when you see something like VVIX start to take off to the upside, look, bottom line, somebody's hedging. It doesn't matter who it is, somebody's hedging. They're buying calls. You buy calls, you're actually going to drive, VVIX higher. All right. There's no if and or but about it. All the VVIX is, okay, is a measurement of 30-day vol around, again, VIX options. And those VIX options, some 30 days out, they're starting to amp back up. That's the first real movement, though, that we've seen in VVIX in quite some time. Now, does that basically, portray a much bearish, more bearish picture? And the answer to that is not necessarily so. Like, look, you might be hedging, but you may know nothing. All you know is that this rally has been rather persistent, and maybe you're a little bit nervous about CPI. So let's not point any fingers and say that, VVIX is definitively bearish, because it's not. Okay. The next on the docket, unequivocally now, this is a concern. Okay. Bonds. Bonds have had some strong sell side activity. In fact, to really kind of enunciate more effectively what kind of sell side activity, you go to TLT and I'm going to apply auto expected moves. And the reason I wanted to apply auto expected moves, you get a feel that the bond market, it got crushed, and it's almost what we term like a 2 sigma move, which implies that, yes, this has been an extraordinary move in the bond market. In fact, when you look at the TNX is the 10-year interest rate. It ripped this week. So we started out the week, and again, I want to be very, very clear about this, but we started the week just under 3.4%. Okay, we're going to close at like 3.75%. That's a big boy move, no question about it. It's a very, very big move. In fact, when it comes down to it, it's one of the larger up moves that we've seen in quite some time. So if there is a little bit of a bearish connotation, okay, to the marketplace, not just to what I'm looking at, but if there's a bearish connotation, yeah, unequivocally, it's got to be interest rates. And the moment those interest rates took off to the upside, they killed the usual suspects. Okay, and we're going to talk about just that. And I'll come back to the dollar here in a second, but take a look at Tesla. Tesla reversed. All right, is it getting absolutely decimated? Nope. I want to bring something up. Okay, look, there's some sell side activity in Tesla, but did you realize that Tesla was way outside the upper edge of the expected move? So before you get all bared up with no place to go, Tesla just pulled back. It's going to end the week higher. Take a look at NVIDIA. NVIDIA. Same thing. It actually smashed the upper edge of the expected move. Again, smashed it. Okay, smashed it the week before, smashed it the week before, the week before, the week before that. It's ridiculous. Of course, it's going to have a little bit of a pullback. But what I'm getting at here with Tesla, what I'm getting at with NVIDIA, I don't think these are necessarily bearish connotations for the marketplace. So what? It pulled back. It's going to be massively unchanged on the week. Moving right along, take a look at something like Microsoft. You would expect these underlyings to pull back heavily, all right, in a rising interest rate environment. They're pulling back, but they're pulling back from astronomical levels. Again, Microsoft was way outside. 2 sigma move to the upside, pulled back in. Okay, nothing to see here. That's just a very normal move. Okay, now we're going to get a little bit more sophisticated in terms of our sell side activity. Here's a little bit of a problem. Okay. Apple, yeah, Apple actually stalled out and has been stalled out for almost the better part of 2 weeks since its earnings have actually come out. Apple's completely stalled. Apple's actually going to close at the lower edge of the expected move. And the big loser on the week is Google. But Google, it's not about earnings, it's about, the threat of Chat GPT. Okay. Should we ask Chat GPT about Google? What might it actually tell us about Google? Well, in this particular case, Google, between 2 and 3 sigma move, that thing is, wow, outside that expected move. Nevertheless, the point that I wanted to make with this is, given the fact that the bonds had sold off so much throughout the course of this week, and again, forget about VVIX, push all that aside, the bonds sold off significantly, but it didn't smash tech quite as hard as I would have anticipated, right? Tech got pulled down, but it got pulled down by the anomaly that is Google at this point. And that's it. Okay. There could be a lot more room for improvement to the downside, specifically in tech, if the bonds continue lower. The other kind of worrisome aspect, of course, is the dollar. Now, the dollar, it popped and popped big. Okay. But that was, last week. This week, basically flat. Nevertheless, the dollar actually remains poised for the possibility of more upside potential. But again, there's nothing in here in this chart. There's nothing in here that says we're going up versus going down. This is completely binary. It's just that the dollar, okay, is in a very guarded stance. Clearly, the bonds are selling off, okay, coupled with the fact that we have a higher VVIX. Again, you start to couple those things, you're like, all right, you do have to be worried about, okay, a more bearish move right now. I mean, much more so than any of the other recent weeks. Okay, why do you have to be worried? Because there's a confluence of indications right now that basically say, look, okay, I don't know if we're going to break down, but if we do, we're ready to rumble. Like, meaning that, hey, the entire marketplace is portraying risk is coming back and coming back in a big way. VVIX poised perfectly for it, right? Bonds are, selling off already. Dollar is poised to go a little bit higher. You've got Google that's, getting crushed out there, but nobody's actually going for it yet and seeing the sell side activity. The other absolute cornerstone, in my opinion, of this marketplace has got to be the financials. I have said this now for a full month, and I'm going to say it again. You will know, okay, when this marketplace breaks, okay, this rally. You're going to know it because it's going to be all about financials. If you take a look at auto expected moves, I know that the SPX is very close to breaking outside of its expected move, but take a look at the financials, right? Where are they on the week? Flat. I mean, frankly, the financials, they have not moved, not at all, okay, in over 2 weeks. Nothing. You've got absolutely nothing over here. So before we actually get on our little bear horse, okay, yes, there's a thing called a bear horse apparently, but before we actually get on that bear train, I think you have to be a little bit, concerned. Like, hey, look, the financials haven't broken, and rates right now are actually heading higher, which you think would help out, okay, and they might actually help out some of the financials. But financials pivotal into this next week of trade. All right, next thing I want to bring to your attention. Oh, we are right up against it too. Okay, I would not be at all surprised. See, the S&Ps close in and around, okay? And again, this is the specific level, 4106. Okay, my mouse is basically on it, 4106. And for this, I'm actually going to cruise to the 30-day. This is a 30-day, okay, 1 hour. And I want you to see how pivotal of a level this happens to be. So let me just leave my mouse there for a second. Where my mouse is, that's not where the market presently is. It's only 6 points off of it. Okay, it's an absolutely pivotal level. It's been kind of like a key inflection point in trade. Now, I'm not ready to call this a gravity point just yet, but I would not be at all surprised to see us close in and around 4106. And the S&P futures has been a pivotal level. Above it, okay, for right now, it'd be bullish. Below it, okay, would actually be a little bit more of a bearish connotation for that marketplace. All right, now we're going to get to things interesting. Find love in CPI day. Okay, so next week, what do we have on the docket? Yes, on February 14th, it's Valentine's Day. What can we expect? Yeah, some CPI, okay? Love in the CPI. So this is all about consumer inflation. That number, yeah, we're going to move. And as I said, don't take my word for it. Look at the SPX. Okay, now the SPX, it's just pretty good at handicapping risk and forward risk. And one of the things that I just want to point out, okay, is if you take a quick glance, let's go to the end of the week. Like, let's not even mess around with the fact that, okay, here's Monday, here's Tuesday, All right, so even on Tuesday, there's like an 80-point move expected between now and Tuesday, which is shockingly high. But the entire week, all of next week, is portraying about a $105 move. Okay, now I'm already getting ahead of myself, but this past week we only had a $76 move. So you got to understand that CPI, yeah, there's other announcements coming out, but people right there, that's the driving force. Like that's going to be the big player in the room. And again, the first move that you see in CPI might not be the last. And I always say that. So if there's an explosion to the upside in CPI, we might reverse thereafter, and vice versa. If we actually see big sell side activity, okay, those shorts may cover and explode back up. It's gonna be wild in terms of order flow around CPI. That's something that I am going to explain in a lot more depth, of course, on Monday morning live here on TheoTrade. All right, let's talk a little bit about portfolios and trading right now, and specifically what I've got on. Get your trade on this week's profits and losses. What I wanted to focus on here, okay, we're setting up a couple of trades. All right, real briefly, okay, Morgan Stanley, one of the reasons I'm actually taking, in this case, a bearish trade on it. Why am I taking a bearish trade? Does it look like it's rolling over? Not necessarily so. Morgan Stanley happens to be the outperformer in the financial world. I'm looking for a little bit of a pullback here. The next approximately 30 days, I used a bearish in-out spread on it. Next in the docket here, if I bring up PFE, which is Pfizer, Pfizer's been getting absolutely crushed to the downside. Okay, Pfizer, okay, forget about news, forget about anything. This is a cyclical rotation, in my opinion, out of Pfizer. Okay, as such, I would look for a cyclical rotation right back into it. So if markets get a little crazy around CPI, okay, traders may actually dive into things like Pfizer and start buying Pfizer even on Monday and Tuesday, okay, because of CPI, because of that print coming out. You know, you may see a little bit of a rush into, again, some of the cyclicality of, well, stocks where people like to protect themselves, like a Pfizer. So I put in a bullish position inside of Pfizer. Last but not least, one of the big positions I did this week is actually in the QQQ. Now, I placed this QQQ position in a number of accounts, okay? So in Tastyworks, again, and I do trade in a number of different accounts over here. So, okay, with all due respect, I'm going to highlight all the different accounts. You can see I've got a lot of different positions inside of the Qs, okay? But I got a very significant bearish position on, and I've got that position on, again, as I said, in a number of different accounts. What I'm actually doing inside of the QQQ, okay, I'm taking an out-of-the-money bearish stance. That stance is going to be for the next 70 days. 70 days. You're like, well, why? Okay, because for the most part, what I did is put on a big bearish stance in the QQQ, but I'm using catapult, which means I'm financing the QQQ trade. I'm buying QQQ spreads, out-of-the-money spreads, and I'm looking, okay, for just this wicked move down. How far down do we have to move? And you can see one of the trades in here. Again, I have a few contracts, I think, packed inside of this account. One of the trades is the 290, 280 spread. Okay, I've actually spread around these trades a little bit. Getting down to this 280 level would be wildly profitable. And that entire trade, this entire bearish trade inside of the QQQ was financed, okay, by having actually sold out of the money options in the S&P options on futures contracts. Okay, so sweet, we're actually set up beautifully if we are going to break to the downside. People go, well, what if we break to the upside? For breaking to the upside, it's not going to cost me a dime. Not going to cost me a dime. If we do break to the upside in the marketplace, okay, I've got, again, a number of other trades on, including like Pfizer, which is bullish at present time. All right. Switching gears once again, let's land back to the SPX. So we're already talking a little bit about expected move. As I said, incessantly mentioning expected move. So this past week of trade, okay, we were looking for plus or minus approximately a $76 move. Did we get it? Yes, we did. Okay, and check this out. You want to talk about efficiency with expected move. This, people, this is today's trade. Okay, look. There's a line we drew on the screen last week. There it is right there. We actually tagged the lower edge of expected move, bounced off of it. Okay, that's it. I mean, so what do we do this week? We did exactly what we were expecting to do. That's why I said there's no wicked sell-off. Let's not get all kinds of crazy. But here's the one thing, and again, that I want to drive home. I want to reiterate. If this week we're looking for plus or minus $76, that's this week that just passed. The coming week, okay, the coming week, we have plus or minus approximately $105 move. And you go, well, where are you getting that $105 from? I'm going to show you once again. The $105 is coming from right here, okay? Once again, that 7-day expiration. There it is, about $105. Now, the market's not settled out. We're not settled out yet, meaning that, hey, this could actually go higher or lower, but I just want to give you a feel. So when you go from a $76 move, and this past week, not that much happened. And all of a sudden, you look at a $76 move in the very next week, which it has CPI coming out, but all of a sudden it jumps to $105, okay? Hands and feet inside of the vehicle. You got to realize that when you have, okay, between a 20 or maybe 30% jump, okay, in expected move, that's big boy. That's big boy stuff over there. And that's not to be taken lightly. The marketplace sees it coming. It sees the risk coming. We also have, all right, a Monday, a Tuesday, a Wednesday, a Thursday, a Friday morning, and a Friday afternoon expiration. It's a freaking SPX party throughout the course of the next week. There's 0-day expiration, okay, constantly throughout the course of the week. And I'm going to tell you right now, it's going to be a volatile week, all right? You're going to have to deal with CPI on Tuesday. There's going to be a lot of positioning prior to effectively the CPI. Do not be surprised to see us trading right and around that 4106 because that's that kind of key inflection point. You know, people could mention VWAP and everything. Push all that aside. I am telling you, it is an absolutely critical juncture inside of the marketplace. Got to watch bonds for more sell-side activity. You got to watch the dollar to see if it's going to rally. The financials, pivotal. The financials break and they go down, we're all going down. That means the S&Ps are going to fall and fall hard. Is the bear market rally over? Listen, I'm not ready. I am not ready, okay, to throw in the towel on the fact that this rally is just over and done with, okay? That CPI could change the way you feel about this marketplace very quickly. The other thing that I've stated time again is this rally, it's meager in comparison to this rally or this rally. And you got to keep that in mind that there could absolutely be more, okay, upside potential. Nevertheless, okay, you're marking time right now on this rally. There is no question, okay, that this marketplace is going to have some just wicked pullback. If you are bullish right now, define your risk. For those of you that are bearish, okay, hey, look, just keep your hands and feet inside of there. Just wait for that move to basically take place. We are much closer, all right, to pullback than we were just 2 weeks ago. There's no question about that. It's just a matter at this point, are we going to get the data that's actually going to spark, all right, the next major move in this marketplace? Thanks, everybody, for joining us here at TheoTrade. Have a wonderful weekend. Bye-bye.